What's good, all my trader homies? It's your boy Kevin from Touchdown Trades. I just got back from the beach. I'm back in the Touchdown Trades trading dungeon. So this week I went to the beach with my girlfriend and I wanted to put a trade on that I didn't have to monitor every second of the day sitting in front of the computer. I didn't want to have to babysit it. I wanted to be able to enjoy my vacation. So what I did is I put on a stock options trade on this Tesla, because Tesla's options chain is the piggy bank that just keeps on giving. You have retail traders putting all their hopes and dreams into puts and calls, looking for directional moves, and 90% of the contracts that they're buying are expiring worthless. Well, guess what? This week's trade that I put on made me $2,000 profit. I netted that today when I closed out the position. And next week, I'm going to be putting on the exact same trade when I go to the beach with my family, Trader Life, going to the beach 2 weeks in a row. And I'm going to be looking for a profit potential of $5,000 on this trade. I'm going to share this strategy with you today, and I'll show you how you can implement this strategy into your own trading. So let's get into the charts and talk about this Tesla trade that I put on this week and the Tesla trade that I'm going to be putting on next week as well. Roll that intro. All right, traders. So I just got back from the beach. I closed out my iron condor position that I had on Tesla. I had sold the 1530 call on Wednesday, bought a 1540 call, sold the 1380 put, bought the 1370 put. And I could have held it. It did end up expiring worthless, but I closed it out here on Friday morning for $2,000 profit because I didn't want to hold it. I was driving at a 6-hour car ride back to Atlanta, and I didn't want to hold it through that car ride, having to watch it. So I just closed it out. So what I did is I sold 7 iron condors, and I got a net credit of $3,500. So it was about $5 per iron condor contract that I sold. So I ended up just keeping $2,000 of that credit when I closed it out. But it was a beautiful trade, stress-free trade. I entered it here, and the only stress I really had was when we had this little spike, but after hours sold off, and ever since then it was just chopping around, and that time decay ate up those contracts and gave me my profit. So I'm going to the beach again next week, and I'm looking to put on the exact same trade, and I wanted to share this trade with you guys, because y'all are my trader homies. That's why. And I feel like it's an important strategy to have, as even though I'm a day trader, when I go on vacation or I have plans with my son or my family, I don't want to have to be monitoring positions all the time. And I do swing trade quite a bit as well. So, and I use this strategy. I've been using it for the past 3-4 years now, and it's made me a ton of profit. And I decided it's time to share it with all my trader homies. So this week, I want to plot out a trade as well. So what I want to do is find some support and resistance levels that we can risk this trade off of and base the trade off of. So we got a pretty obvious level right up here off the hourly chart on this Tesla. That's this level right here, this $1,600 level, is where we're going to sell our call contract. Okay, so let's look for a level to sell our put contract, a support level. So we got a very obvious level down here around 1440, and that is where we will sell our put contract. So we're going to sell the $1,600 call, buy the 1610 call. We're going to sell the 1440 put and buy the 1430 put. And that is going to give us our iron condor. So let's go into the options chain of Tesla here and analyze this trade. All right, guys, so I'm in the options chain for Tesla here, and I got all the contracts listed for, I got all the contracts. Typically you only see about 10 contracts, and it'll look something like this. We're going to go into the weeklies, and it'll only look like that, but I want to see all the contracts. So here we go, and we wanted to sell the $1,600 call, so let's find that one, and we're just going to find it. We're going to right click it, and we're going to go to sell iron condor. I'm going to click that, and we're going to sell the $1,600 call, buy the 1610 call. We are going to sell, what was the put that we were going to sell? I forget already. I think it was the 1440 put. We're going to sell, and then we're going to buy the 1430 put. And that is going to give us a credit. Let's see what type of credit we're looking at. See, that's not right. It's saying it's a like a $10 credit, but that's not going to be right on Monday. It'll probably be like a $7 credit. So let's analyze the probability of this trade. So we're going to right click it, and we're going to go to analyze trade. Okay, so these contracts expire. When do they expire? They expire on the 24th of July. So we're going to go back to the Analyze tab, and we're going to look for the 24th. Where is it? Where are you, 24th? Right here. So this line is the expiry, and we're looking for 1440. All right. So we have about a 60% chance of being above 1440. Okay, 60% chance to being above the put that we sold. All right, now let's find the calls that we're selling. And we sold the $1,600 calls. So we have about a 70% chance of being under the $1,600 calls that we're selling. So what that's telling me is that I maybe need to move my puts a little bit down. I'm fine with giving up a little bit of credit to have a higher probability of profit at expiration. So I'll probably move the puts down, let's say to 1430. I'll sell the 1430 and I'll buy the 1420. And what that's going to give us is probably a net credit. I'd save about $6 per contract. So if we sell 10 contracts, that will give us a net credit of $6,000. Okay? So the max loss on that trade, if we're getting a net credit of $6,000, we're risking $10 each way, but only one way. If say the stock rockets up, Tesla rockets up, we can only be down $10 per contract minus the $6 that we take in. So we're only risking $4,000 on this trade to make $6,000. So let's go back to the charts. Get rid of this drawings. So as long as Tesla next week stays in this range, just chops around and digests this huge move that it just put in, like I think it will, we could get a move something like this, because Tesla's volatile as hell right now. But as long as it closes in this area here, we keep the $6,000. But if it let's say it moves up and holds above this level here and holds above the 1610 level, we'll lose $4,000 on the trade. That is our max loss is $4,000. So we have a defined risk of $4,000 to make $6,000. It's a great trade. You don't have to monitor it. Let's say Tesla does one of these and it breaks down through the puts that we sold, comes back, retests it, and starts to sell back off. We don't have to stay in the trade. We can get out of it. That's another thing that people don't realize when selling iron condors. You don't have to stay in a losing trade. You can cut your loss. But I like to hold them. Let it give time to work out. Not worry about the trade too much. This strategy is about not having to babysit it. I hope you guys got something from this video. I really hope you guys can use this strategy in your own trading. And if you did get anything of value from the video, hit that like button for me. I really appreciate the channel growth. We've been taking off this month. We've gained over 500 subscribers this month. Let's keep the momentum going. This is one of the only, I'm not going to say the only, but one of the only real trading channels on YouTube. There's a lot of fake traders out there promoting fake guru baloney. We don't do that here. We're actually a professional trading platform, and we're trying to help new traders out. So hit that like button, subscribe, and I'll catch you guys in the next video.
Drop.